The reason you are failing to get payouts from prop firms as a forex trader is because your strategy is underdeveloped. Your process is not clear, which makes it impossible for you to trade profitably. And until you develop your strategy properly, you will continue to struggle to make payouts. And that's why in this video, I'm going to walk you through the 4 components needed for a well-structured strategy that you can copy and implement into your trading today, which is going to place you on the right path to being able to trade confidently and begin to request consistent payouts from prop firms. So what are these 4 components? As you can see on your screen, component number 1 is timeframes, component number 2 is trade management, component number 3 is what and when, and component number 4 is a clear process. By the way, if you would like my help with trading profitably, getting funded and making consistent payouts, check out the link in the description. So in this video, I'm going to be walking you through each component in detail, which, like I said, you can copy and begin to implement into your own trading so that you can trade more profitably, more confidently, and like I said, begin to make those consistent payouts that you want. Starting with component number 1, timeframes. So there is 2 subcategories within component number 1, within developing and having the timeframes within your trading strategy. We have your entry time frame and we have your analysis time frame. So starting with your entry time frame, this time frame is going to be the time frame you use to identify your entry criteria. It's going to be the time frame you use to actually identify the confirmation, the rules that you need to see in order to actually take a trade. And of course, it's also the time frame you're going to be using to actually enter your trades within. Secondly, we then have your analysis time frame. This is usually a higher time frame you use to identify the market's trend, the price action, or any indicators that you may be using for your particular edge. And so this analysis time frame, as we can see here, this can actually be the same as your entry time frame. So you don't actually have to have multiple different time frames. Your entry time frame, okay, and the time frame that you use to analyze the market's trends, any indicators, the price action, it can actually be the same as your entry time frame. But again, this will all depend on the strategy you trade and the style of trading that you actually implement into the market. So it's important to have these written down and actually understand what time frames you're using and what you are using them for. Pro tip, okay, there's no right time frame. Okay, there's no right time frame to be using. Okay, you need to find the ones that you enjoy trading the most and the time frames that you understand, the time frames that fit your style of trading. Those are the right time frames. The right time frames are the ones that are right for you. Okay, so you don't need to worry about what anyone else is trading. What you need to focus on is identifying the time frames that you enjoy trading and that you understand and it fits with your own style. So going into a bit more detail here, you must have all your rules for entering a trade written out. Okay, and I've got an example here. This is an example from my own trading process. This is a little snippet of what my own trading process looks like. And I'm showing you this so that you can understand how you need to have things written out within your timeframes when building a well-structured trading strategy. So for example, if the 4H structure is bullish, so as we can see here, I have my analysis time frame. I have a higher time frame that I'm going to be using to analyze the market's trend. I have it written out and I know how I'm using it. So if the 4H structure is bullish, I must wait for a pullback and then scale down to the 15-minute. Again here, I have identified what time frames I'm using for my entry time frame and how I will be using it. I will scale down to the 15-minute to wait for my bullish entry model demand zone before buying. The 15-minute, so again here we have a time frame that I'm going to be using to enter my trades and the rules I need to see that I have written down here. The 15-minute must break and candle close above structure to be valid. So as you can see here, it's very simple, but I have written out my process and how I'll be using my particular time frames. And you need to be doing the same when developing and building a well-structured trading strategy. Moving on to component number 2, trade management. Inside trade management, okay? And when developing and building your trading strategy, you need to understand how you will manage your trades. What will you risk? You need to clearly understand exactly how much you will be risking for each individual trade. It needs to be written out, it needs to be clear and part of your process, part of your trading strategy. Will you move your stop loss to break even? Okay, so will you actually move your stops when the trade moves in your favor? And if you do, when will you move your stops to break even? Okay, so for me personally, when price reaches 2R in profit, I will then move my stop loss to break even. I will take the risk off the trade because I understand from collecting data, from understanding my strategy, when price reaches 2R, if it doesn't continue pushing to my take profit, there is then a chance that price will then just reverse and stop me out for a loss. So I've identified with my own strategy through the data I've collected, when price reaches 2R, I want to move my stop loss to break even because once it reaches that point, it will either continue to my profit target or it will reverse and take me out of the trade. So I don't want to be taking a loss if I don't need to. So will you take partial profits on your trades? Will you take some money off of the trades or will you let the full position run? What's your take profit plan? What are your exit targets? Okay. Do you trade a 1-to-1? Do you trade a 1-to-2? These are all things you need to understand and have written out as part of your trading strategy. And again, the answers to these questions will depend on the strategy you trade. So you need to collect data on your own strategy and understand how each individual winning trade plays out or how the majority of your winning trades play out. If you notice that price only moves 1R in profit and then just reverses all the time on the majority of your winning trades, then maybe a 1R target is what you need to be trading. Or if price reaches half of your take profit target and reverses or starts to pause around that area, halfway of your take profit target, maybe you need to then look to move your trades, your stop loss to break even at that point. The point I'm trying to make is that you need to identify and review all of your winning trades, study your strategy and understand exactly how you will manage your trades. Go through these questions and understand and write down what and how you need to be managing your own trades as part of your trading strategy. Moving on to component number 3, what and when. So, what and when? What stands for what pair will you trade? And this is targeted at forex traders. However, if you trade crypto, stocks, bonds, futures, this is just what instruments will you trade, okay? And when? When will you be at the charts? I spoke about this in my previous video about understanding when you need to be at the charts. Just to briefly go over that, the time you need to be at the charts is when your strategy is most likely to present itself. So you need to understand by collecting data, reviewing all of your profitable trades, identify and understand when exactly the majority of your trade entries are presented. What session, what time period throughout the trading day are they most likely to be presented? That's when you will need to be trading and you will build that into your trading process. You will write down, I will trade from start time to end time throughout the trading day, whatever session that may be for you. And what you will trade will depend on your style of trading, okay? I personally trade Euro, USD and gold because for me, those pairs play out the nicest. They move and are aligned well with my own personal strategy. So again, play around, have a look at what pairs move the best. What pairs do you like to trade the most and stick to those, and what pairs align the best with your own edge. So the best pair to trade is the one that aligns with your strategy, okay? And the best session to trade, as I've said, is the one that presents your edge the most within. And so again, if you would like my help with all of this, developing your trading process, helping you to increase your performance in the market so you can trade more profitably, get funded, make consistent payouts, do check out the link in the description. Moving on to component number 4. Okay, the last component of the 4 components of building a well-structured trading strategy. Very simple, but from having the privilege of teaching, mentoring, coaching hundreds of traders throughout my trading career, this is something that a lot of traders fall short on, okay? They don't have a clear process. Okay, they don't have what we've gone through today. A trading strategy is not completed until it has been written down. The amount of times I've spoken to traders and they've got an idea in their head of what they want to be trading, how they want to be trading, but it's not written out. There's no clear structure, like what we've gone through today, to their trading process, which means their process is inconsistent. And if your approach to the markets is inconsistent, you're not trading the same way, how you're managing trade is inconsistent, you're not going to get the consistent results you want. So the fourth component to building a well-structured strategy is to make sure it is written out. Okay, so an action step for you to take: watch this video back again and build your strategy using these four components. I will timestamp this video for each component and you can go through them one by one and implement everything that I am talking about and build it into your own trading process, into your own strategy, so that you have a well-structured strategy that you can implement into the markets and begin to trade more profitably and improve your performance in trading. Little bonus here before we finish up. Okay. This is something I personally do and that has helped my trading massively, as well as the traders that I've worked with to improve their performance, trade more profitably, get funded, make payouts, and actually get the results they want from trading. It's very simple again. But what I would like you to do, what I suggest to you to do, is to utilize your written process. So assuming you have actually gone back on this video and followed and built your trading process based on the four components we have gone through together, utilize this written process as part of your mental preparation before you begin to trade. Okay? You don't just want to be jumping into the charts without actually mentally warming up and getting mentally prepared for the markets. Trading is a performance activity, as I've spoken about many times. So you need to actually make sure that when you come to the trading day, that you are prepared and ready to trade the markets. You do not want to just be jumping straight into the charts expecting to perform well. And so what you can do to improve your performance is to use your written process that you have to go through it and remind yourself exactly how you need to be trading, what your entry criteria is, how you'll be managing your trades. And what this is going to do for you is, when the market increases your emotions, when something happens that heightens your emotions, makes you become emotionally volatile, by constantly reminding yourself of your process, it's going to become second nature to then fall back on the process you have instead of reacting emotionally. And this is something that will help your trading massively and has helped my trading by simply spending 5 to 10 minutes before the trading day, before opening the charts, to go through my process and to remind myself of how I need to be trading and not trying to trade based off memory here. So this is why we're writing down, okay? We want to be having it written down, our trading process, and we're not just trading based off memory. And to go through this process to remind ourselves of what we need to be doing, the actions we need to be taking, and the process we need to be taking so that we can perform at a high level and actually get the results we want from trading. I hope this video has helped, and I will see you in the next one.